We manage a lot of data as a market maker. We also understand that quality of data is going to be essential for any type of machine learning or AI to be successful. And today, the whole data bottleneck is still very much existent and very much, relevant. So doing this in a decentralized manner is a great idea, but I think we are definitely not there yet. I'd love to, receive comments on your podcast with links towards exciting stuff happening on the data side. But I think that's going to be essential and needed for us to be talking about relevant applications of machine learning and AI into Web3.
Before we begin, please note that the content provided in this podcast is for informational and entertainment purposes only. It is not intended as financial advice. Any decision you make based on the information presented here are at your own risk. Always consult with a qualified financial advisor before making any investment decisions. Now let's dive into today's episode. What or who is a market maker? And how do they function in the crypto landscape? I did not know the answer to this before having a conversation with my today's guest. In this episode, I speak to Stef, the VP of Market Making at Keyrock, which is the digital asset market maker. Stef talks about all things market makers, the VC landscape in crypto, and life at Keyrock, which is exciting as the company is growing very fast. I'm Diksha. You are listening to Web3 Quest, and I really hope you enjoy this conversation. Hello, Stef. Welcome to Web3 Quest. How is your day going?
Very good. Thank you very much, Diksha. Thank you for having me as well on the podcast. Very excited for it today.
Same here. So I just briefly introduced you before this episode started, but tell us a bit about yourself. How did you get into crypto? And then we will get into all things Keyrock and all the other amazing things you do in the industry. But first, your personal story.
Sounds good. Yeah, I think, my personal story is probably a bit similar, like many people that joined the industry pretty early on, is that in 2015, maybe around 16, I think early 16, I discovered Bitcoin through a friend. I've heard and read about it, but there's a big difference between reading about it and actually understanding it. And through a mutual friend, I was introduced back in the days in London to join him at a conference, which was in Shoreditch. Was very small, and it ended up being, with all of the, like they call the crypto OGs, right? All of the old people in the space. So Vitalik was there, Brock Pierce was there, and quite a few other, entrepreneurs in the industry. And they were speaking about tokenization and security tokens at the time was starting to become a thing, and talked about Ethereum. And then all of a sudden, I fell in this rabbit hole where I started to realize, wow, this is exciting. And at the time I was working in London, and I was predominantly working on the agency side of things, where we tried to explain very complex matters in simple ways. And we did this through video, we did this through other techniques, etc. And I realized this industry needs to start thinking about explaining this very complex stuff in a simple way. So, I found a company, an agency, and we started working on that, and then, fell into the rabbit hole. Became a full-time participant in the industry, and got me to the place where I am today. I've been working, at Keyrock for 5 years now. I met the founders pretty early on. Keyrock was founded 6 years ago, and never looked back. I've been enjoying this ride a lot, lots of ups and downs, just like the markets, which makes it, rather exciting to be part of. And it's been a great journey so far.
5 years with one project in crypto is like a lifetime, right? That you really have to be like, you have to believe in what they are doing. So tell us a bit about Keyrock. Why did you join them? What was your inspiration to join them? What do you do at the company?
Yeah. No, 5 years is a long time. You could almost think of it as 1/3 of, Bitcoin's, let's say, age, which is a fun statistic. But no, I met the founders. I met Juan David in London in 2017, and he portrayed me the vision of the tokenization of assets is something that is exciting. And what it does, it opens up, a whole variety of financial primitives that will facilitate, the democratization of finance in some way, right? So there's going to be lots of exciting stuff happening because of it. Now, if you want this all to work, liquidity as a concept, so the capacity to be able to interact financially with that assets under fair market conditions and a fair price, etc., is going to be essential. Right? Otherwise, you won't be able to, have tokenized economies and have a great solid go-to-market plan. So when you tokenize something, you made it tradable, but you haven't made it liquid, right? And financial markets wouldn't exist without the concept of liquidity. So in order to get there, you need to be able to count on market makers to offer you a service, and those market makers need to be able to offer it at scale. And what Keyrock has built from, day one is built this really solid, scalable infrastructure for us to be able to offer market making service on top of that has given it the capacity to grow now to the team that we are today. And he was explaining me that at the start. And because I was already focused on go-to-market strategies and make people understand what this technology is all about, I understood that the biggest impact, Keyrock could have is actually adoption. And that's what we do on a daily basis. We help the adoption of tokenized economies through liquidity services. And that's why I joined. And it's been a great journey. I was there when we were working in a small co-working space. We're maybe 6 or 7 people at the time. And now we've grown to be, a team of 180 people globally. We had the pleasure of being backed by notable venture capital firms, by big enterprises in the industry, by actually even the Swiss stock exchange, right? So, it's been really great, but the journey has only begun. It is great to be able to raise capital and to grow a team. But the hardest step is to work towards longevity and actually make an impact on the world. And that's what we're working on today.
So how do you think that things have changed for you as someone who's been in the founding team or early in the team, when maybe you did not have so much capital, it was more like bootstrapped, and now that you have it, and you're well funded. So what do you think are the changes that have come in the working style of Keyrock?
Yeah, it's a good question because, some people think it makes things easier, which is actually not the case. I think it has advantages and it has challenges. I think the advantage from being there early on and bootstrapping is that you think meticulously about how you invest money. You're always going to be looking at, is this worthwhile? Does it make sense? What is going to be a return investment on this, etc. Which I think is a great ethos to have, and you end up not splashing money for the sake of it and doing funky stuff just because you have a bigger balance sheet. The challenge, though, in itself is that daring to make investments as a founder or daring to make investments as an early stage team is also something that is not as straightforward as it might sound, right? And investment and being sometimes a bit more aggressive than you would like to is needed in order to be able to grow. And I think it's finding that right balance today, which remains, not always as straightforward as it is. And, that's why surrounding yourselves with great investors who can give you guidance, but also surrounding yourselves with veterans in not only the industry, but also maybe on traditional finance or in, tech, let's say, or in tech investments or tech scale-ups, having that experience and surrounding yourselves with that talent can definitely help. So it's been an interesting journey so far, and we learn every day from it.
And I think it was late 2022, right, that you raised capital. And what are the milestones you had in terms of deploying that capital or opening divisions or saying, okay, we were not doing it before and now we are going to do it?
Yeah. Before maybe diving into the milestones of how, we're deploying capital, I think it's also worthwhile to maybe take a step back and think about what the milestones were of actually being able to raise the capital at the time. Because, I think that's often overlooked and is equally as important. I think what's been important for any company in crypto or in digital asset space, or any company in a fast moving, industry that is about to, be developed and is going to have an explosion of interest, is you need to survive, right? And you need to be extremely careful about, counterparty risks and avoiding to take shortcuts. And if I often have to think about Keyrock and the reason why we were able to raise that capital, or we were able to survive, is because we were kind of boring. And especially at a market maker, when you are trading 24/7 and you're active in an unregulated markets and you are looking into all of the, let's say, fast-paced money-making machines out there, it's easy to take shortcuts. And I think we pride ourselves in never, having made a shortcuts or tried to make shortcuts, which gave us a capacity to de-risk ourselves from black swan events like, the Luna collapse, or, the Genesis counterparty risk on the credit sides, or FTX for that matter. And I think those are the milestones that brought us to, that great moment in end of 2022 to be able to swim against the stream because of a great fundraising round, which we had thanks to our lead investor, which is Ripple, which was and still is one of our biggest partners, and has been able to do their due diligence for the last 4 years, right? And has been able to see us being stress tested by the market, etc. And I think, the combination of those things is for us, has been a great milestone. It's something that we take back to also on how we're going to deploy, our capital into new opportunities. And I think today, our milestone efforts are doubling down on what we do best, which is providing market making services towards token issuers in the industry and exchanges, to launch, and to expand our OTC desk. We actually made quite an exciting announcement about it today, where we're able to expand, our OTC capacities for institutional counterparties on quite a variety of assets. And then thirdly, being able to offer our services also on derivative products. And by derivative products, I mean options. If you look at traditional markets, there's 10 times, 20 times more activity on derivatives for the right reasons than in spot market making, which has been our forte to date. So expanding on that front is rather exciting. We've been building on that for the last 12 months. And those 3 pillars have been our main focus when it comes to the investment of the capital we got end of November. And we're able to swim against the stream. I mean, it is clear that this market is in a, let's say, a slower period in its history. And we can take our time and invest wisely and again, keep building.
So I have a few follow-up questions and a lot of things you mentioned here. But first, let me talk about market makers. How does the whole industry, or let's say this market of market makers, look like at present in crypto? And where do you feel that Keyrock stands and makes you different? Because you mentioned something about, we never took shortcuts. And, could you elaborate a bit on it? That what are these values that sort of make you different? And what are the kind of shortcuts that particularly the industry would take that you don't?
I think to be able to answer that question, in the right way, it's important to first think about what is a market maker, right? Because often the definition of market maker is used for entities that might leverage market making algorithms, but actually as an entity aren't. So, a market maker is actually, in the simplest terms, an entity or a person that is willing to buy an asset, all the while it's also willing to sell an asset, right? And by showcasing their willingness, right, placing a bid offer in an order book or into a liquidity pool, it actually provides liquidity because you could buy or sell from me as a market maker, right? So doing that at scale and as a service, which makes you a dedicated market maker, actually provides a lot of value to the industry because there's more liquidity, and as such, people can interact, at a more consistent, more in size, and at a fairer price. Now, it's a very hard thing to do because if you think about it, if you want to buy or sell something, you think you're right? Because you think the market is going up or down, and we have to take on that position and de-risk ourselves from that. Often, when you think about trading, it's very hard to make money when you want to choose a direction, right? When you think it's going to go up or down, it's 50% chance of that happening, right? So imagine having to, or being able to make money when you can't choose your direction. You have to take both directions. Right? So it is a very complex thing. So now the thing about this being a buyer and a seller is that sometimes entities use that specific type of algorithm to get specific deals with exchanges, or actually have a directional, skew towards their strategies, but it makes them more hedge funds. So the difference between that is quite important, because a hedge fund or an actively traded, or an actively trading entity might have a directional preference of an asset being long or short, while a market maker does not have that. A market maker is delta neutral. So I think that, the difference between those two definitions is quite important, because lots of market makers in this space are not really per se a market maker, and there to be a dedicated service provider, they tend to be, let's say, more directional players out there. And I think we've seen that in some instances on markets over the last, years.
What are the segments that you deal with, like in terms of your target audience or target partners? What are the different buckets that a market maker would work with, and which is the most important or strongest at this point for Keyrock?
Yeah. So there's three main, let's say, counterparties, as we call them, or three main buckets. And the first one is token ecosystems, right? So big token foundations. You could consider, for example, let's say the Tezos Foundation. You could call that a token ecosystem. What's important for them is that they have a great liquidity partner, because that way applications can build on top of it and their ecosystem thrive. So we help them with liquidity solutions, and that can be both on the treasury management side as actually on their token liquidity. So that's the first bucket of quite a few of our partners. The second one is secondary markets, so exchanges and decentralized exchanges as well. So both centralized as decentralized. The concept of liquidity for them is essential, because if they don't have any liquidity, there won't be any traders or any investors, interacting with them, which does not, it does not give them the capacity to monetize their technology. So that's the second part. And the third bracket is institutional investors, or institutional, trading entities that either do not have the technical capacity or don't have the risk appetite to have direct exposure to all of the counterparties involved in crypto. So they only want to face one entity, and as such have the capacity to trade with Keyrock, and as such have exposure to the market. So I think the combination of these three main brackets are typically our clients, let's say our client ecosystem. Which one is more important over the other? There isn't actually any ranking importance. The way that our team today is structured is on those three brackets, and everybody's equally as important. What I could disclose, though, is the trend that we're seeing in the market, and I think we're seeing a big trend in token foundations managing their liquidity in a more professional way, and we're seeing more and more decentralized exchange venues popping up. Which is quite interesting, not just on spot markets, but also on derivatives like perpetuals, for example. But the interest on the institutional side is significant, and we see that expanding, rapidly. So I think those trends are the main ones we're seeing, and that's what we're focused on today.
I'm just thinking about your marketing team, because all the three personas are like so different to sort of interact with, like, because I've been into crypto marketing for like so long. So you said the second one, probably exchanges, and you deal with centralized and decentralized both. What is the difference when you're dealing with the two? Because, especially the kind of drama we've had with centralized exchanges, and, the use case of DeFi has sort of been never stronger. How do you, as a money market maker, decide, oh my God, we are going to partner with, and these are the terms and conditions, and this is our due diligence?
Yeah, no, great question. Because it is a very tough question to solve. It's a very big challenge. And we've seen that with FTX and others. The difference is that with centralized exchange venues, we, as a market maker, run in most cases, the biggest counterparty risk, right? because we are holding assets on exchange. Otherwise, we can't be trading. And yes, there are technological advancements in the space like prime brokerage, etc., that facilitate having off-venue custody of assets while being able to trade on venue, but that is still in development. So for us, our due diligence is quite thorough, and we do this through risk assessments, tech assessments, API assessments, looking at balance sheets if available, etc. But today, those structures remain rather opaque. And you need to, take into account a wide variety of factors for us to be able to make that decision. On the decentralized aspect, it's not just per se the custody part that is of a risk, because you do self custody, but there you're going to look into smart contracts, risk. What is the quality of the smart contract being written? What is the programming language that is being used? Which blockchain are we talking about, etc.? Is there any auditing reports that have been made on your smart contract? So I think the combination of these things is more important on the decentralized exchange side of things. So yes, as you mentioned, we have a lot of effort on the marketing side because of the different buyer personas, but we have a lot of, let's say, minefields to navigate when it comes to both centralized as decentralized risks as a power user of these platforms.
And what do you find the most exciting part of your work or your job or the things that you do every day, or particularly in the crypto industry?
Well, a market maker plays a very central role, right? So we are connected with exchanges, we're connected with token issuers, we're connected to custodians, we're connected with banks, we're connected with regulators. So I think the combination of all these things makes you be able to have insights on how they all work, gives you the capacity to learn a lot, not only about the industry itself, but also as finance as a whole. Because I think one of the challenges of our industry is it's trying to reinvent a lot the wheel sometimes, which is unnecessary. But so I think the variety of, let's say, people that we speak with is rather enriching. The other part is that over the years we've done so much work on the integration side, and the capacity to be an active participant is that the result of your work is very tangible straight away. Although the concept liquidity is very hard to grasp, and often people think they understand it, while it actually still don't. I mean, there's a lot of specific nuances about the concept liquidity. The results are very tangible. Like, we turn on the algorithms and you see the effect immediately. And as such, you have short feedback cycles. You are very accountable for the work that you do. The way we operate in sharing our performance and sharing insights on our trading makes it very tangible and very transparent. So I think the combination of these things is what's great, because you speak to a lot of people and you get results quite immediately. And for myself as a person, that tends to be a good combination.
And you also mentioned that you are pretty active in the VC space, and particularly the Web3 VC space. Could you elaborate a bit on it? In what capacities are you doing this? And then we have more questions on that as well.
Sure. Yeah, it's twofold. I think, first of all, at Keyrock, we do invest in early stage companies. We don't do this per se as a VC fund. I mean, we don't have any external LPs that we have a responsibility towards. You could almost call it more corporate development. And the way we invest at Keyrock is whenever we see an exciting application built on top a innovative protocol that we believe will help us become better as a trading entity. Plus, we believe that we're going to be a power user. Whenever we see and come across one of these players, we tend to be excited to be part of that growth story, because we see and realize that as being a power user, focused on liquidity and building bespoke prototypes for them, the added value you provide early on is incredible, and it's supersedes just the concept of money. In the investment space, I think every investor should consider that money is a commodity, and that just giving some money to someone is just not the whole part of investment. You should also provide value, and So we consider ourselves, a power value provider early on, while also making small strategic investments. On the other hand, I've had the pleasure of being able to advise Tioga Capital, which is a European-based VC fund, in their story from day one almost. So as an advisor, I'm involved in helping on the due diligence side of things and sharing insights on the markets. And it's been great to be able to be part of that project as well. So, both as a corp dev person and as an external advisor to a VC fund that is doing really great in Europe, it's been a great, it's been a great experience so far to do that in Web3 because it's all pure Web3.
So, coming back to Keyrock, at what stage do you invest in, if a startup is listening or a founder is listening this podcast, at what stage do they need to be? What are the 2-3 things that, obviously, like in terms of monetary value, you already spoke about, but what's like the equity arrangement that you have, and what should people do to get investment from Keyrock?
Typically, we'd love to connect as early as possible. But when we actually start investing, there is some type of an MVP, already there. It needs to be tangible. We are interested to meet founders that are not just trying to copy something and do better on a different chain. We're looking for founders that are, looking to challenge the status quo when it comes to any type of infrastructure or any type of secondary market dynamics in crypto. So that's what we're excited for. Typically, is this pre-seed seed stage. I think that's typically the, let's say, the investment, let's say, ranking that you can give on that one, or label. I mean, it's always a bit of a label, right? Seed, pre-seed, A. I mean, what's in a name. But so pretty early on, when it comes to deal terms, etc., we are a strategic investor and follower, right? And I think the responsibility a lead investor has in defining what those terms are is very important and often overlooked, by the way. We could probably have another podcast on that one. I think it's a great responsibility, and sometimes people go too fast in just having an allocation. But so we tend to be followers. So, I mean, we do, in the end of the day, are sensitive to valuations because, it needs to make sense, but not as much as you might have to be as a lead investor. We're more excited about the tech and the vision, because if we are a power user of the platform and we will become better as an entity because of our collaboration, our return on investment is already there, right? And the monetary exposure that we might have towards a company is just a cherry on the cake. And I think it's also quite different to maybe how other, or let's say, colleagues in the space approach venture investment. We don't do this to get a market making deal. We don't look at this as a cost of goods sold, right? It is really that corp dev approach, and we've launched an accelerator program, etc., in order to also, make that statement clear and actually walk the talk. We are a strategic follower, and the alpha that we have is you having made us better as a company, and I think that's the overall approach we take.
Yeah, that was going to be actually my second question: that how do you scout these startups? And I think that's your accelerator program. Do you want to share a bit about that as well?
Sure.
Please.
Yeah, no, absolutely. So this year we started with our first edition of the Accelerator program. We do this in collaboration with Tenity, F10. Reason why we do it together with them is because we had a great experience ourselves as well. I think 2 to 3 years ago, we participated in their Accelerator program, and actually was the layup to our funding round at the time, our Series A. So we do it together with them. It was a great success. I mean, we had almost, more than 200 applications, and we now chosen eight to work with. And we don't do this for any return of equity or anything like that.
Nice.
It's just for us. It's an investment from our end, where at the end we might also make a venture investment, but it's more of how can we share knowledge, how can we share the expertise that we've gathered, and guide them on their journey right now. It obviously has the capacity, to leverage from a marketing perspective, and showcase our walk the talk, let's say, approach when it comes to the venture side of things. But yeah, that's how we got in touch to quite a lot of let's say companies. Now, in our day to day, we get approached by a lot of early stage companies because they're always going to be looking for liquidity services, and as such, we have also quite a lot of inbounds when it comes to founders. So I think those two, let's say, corridors are the main source of leads. Let's put it that way.
So I'm guessing that the profile you are looking at. So we had actually also the VC, the VP of investments from Polygon on this podcast last time, and she was really emphasizing that how investments in Web3 are so different from like a Web2 founder, what she would look before investing, and in a Web3 founder, what she would look before investing is like really different. But what is your view on that? Do you also feel that to be a crypto founder, the conditions sort of change when you're looking at investing in them, or the core values remain same? Or if they change, what are the differences?
I think there's two main differences, and I'll take on one side the founder, let's say, spectrum, and then on the other side the investor vision. As a founder, more than anything else, you need to be incredibly passionate about why this technology is going to change the world as you see it. And you need to be knowledgeable about the different trends, dynamic, and nuances that are happening in the space. Because it's going to save you time, and it's going to be able to launch your go-to-market strategies in a better, more effective way. It is still a tech-heavy focused industry. So either being a tech founder or a tech profile yourself, or being surrounded by very smart people is going to be key. And you only be able to, gather and everyone with their nose into the same direction if you understand why you're all doing this. So I think a visionary approach to founding and building a company is going to be very important, especially early on, within the combination of tech. So I think and although that is probably similar to Web 2, it is conditional here. It's not going to be an option to not have that, and I think that's important. When you're looking at the investor, let's say, profile, or the investor dynamics, is all of a sudden, and I think in the majority of startups that we see today, there's always going to be this aspect of tokenization. All of a sudden, the liquidity profile of one of your investors shifts completely. Like in Web 2, your liquidity comes from, M&A, or it comes from, IPOs. That's how it goes. Here, the liquidity concept is all of a sudden either through some type of a crowdfunding or crowdsourcing, or public listings on either decentralized or centralized exchanges, a variety of tokenomic models, airdrops, inflation models, whatever you call it. And it creates two types of behavior. It creates a greedy behavior, or it creates valuation distortions. And I think on that front, as an investor, you need to be very savvy about how to approach it. You need to have a long-term vision in order to get the right opportunities and the right deals. But you also need to take into account and also be able to explain towards your LPs why you invested in a fully diluted valuation of 100 million while there is no product yet live.
Yes.
And an LP will ask you, what the hell? You've invested into a market cap of 100 million and this startup has no product yet. You have to explain that. And it means you need to have a perfect understanding of tokenomics, a perfect understanding of valuation metrics, etc. And as a lead investor, the responsibility you have on that front is enormous. And again, we could have another podcast on that one.
We should.
It is key. It is key. And we've seen VCs act as non-VCs by, enjoying that liquidity to give instant returns. And you've seen other VCs make the mistake on not being diligent about those dynamics. And I think, as an investor, you need to be very, very much aware of that. And it only makes the due diligence process of you as an LP investing into VCs harder, but also more interesting. And I think that's why, you see a lot of winners in the venture capital landscape. But not everybody is going to be a winner because, imagine selling on day one when you can. It's very public as well, right? Everything's on chain. You have to work on longevity, and you have to have at least 5-year game plan to 10 years, in all honesty. So I think that's the difference between Web 2 and Web 3. So my answer is probably more focused on the investor profile than the founder's profile. But I think that's top of mind, what makes it, what differentiates it. Yeah.
No, I think that's a brilliant answer, actually. So let's go zoom out a bit, more macro level. What do you think is going in favor of the Web3 VC landscape right now? And what do you think is not going in the favor of Web3 VC landscape right now, and why?
Mm-hmm. So I think what you're seeing right now, it actually depends on when you launched your funds. I think you're seeing a big difference in a fund that started 5 years ago towards a fund that started 2 years ago, which is unfortunate. And obviously you can't time things, but I think what we've seen is a massive surge of deployments 2 years ago when everybody wanted to deploy, while the VCs were patient and kept, lots of dry powder on their balance sheet are going to be true winners right now. Now, in that trend, what is great though is that you've seen, because of the success of let's say the first generation of venture capital firms, which I think was 5 to 6 years ago, because of that success, there were a lot of funds that raised in the last 2 years, and they're all sitting on dry powder. And today, I think we've gotten to an inflection point where private valuations have come to par to public valuations. And actually, there's also quite a lot of VCs that are looking at public liquidity investments because they feel that the valuation is getting towards a point where it starts to get attractive again. But you also see that on the private side. So you don't see anymore the crazy valuations. It all's going down. And I think today is a great timing to start looking at those opportunities. And I think that is more of an opportunity than a blocker. The second part, what is a challenge for venture capital is, the last 9 months, lots of things happened. We've seen the demise of SVB as a bank. We've seen FTX. We've seen Genesis. We've seen stablecoin depegs, etc. And we've seen the regulator crack down, in my opinion, in one of the biggest industries within crypto, which is the US markets. And not only from a capital deployment, but also from an innovation perspective, the US market is still incredibly important. So the regulator makes things a bit more challenging sometimes because of the unclarity that it might bring, which makes a VC firm either not capable of raising capital from LPs, or weary about where they're going to deploy their capital and have to make geographical decisions, which is also sometimes, which makes their life more challenging. Today the pendulum is shifting towards APAC. My feeling is that it will shift again back in a very aggressive way to the US one day.
Okay.
I don't think they can afford to lose out on the abundance of tech talents and capital that is ready to be invested in that industry. But it's going to be from one day to another. And that those type of uncertainties of geographical exposure, because often those VCs have a geographical focus, makes life difficult. So I think that those would be the pros and cons from my perspective.
Yeah. So your focus within Keyrock and VC investments is very clear, the kind of startups you're looking at. But in your capacity outside Keyrock, what are the sectors, business models, technologies, kind of companies in the crypto space that excite you and you think that, oh my God, these trends are the one to look for in 2024? I know we always have this new thing coming up every 3 months, but there have to be some dark horses, right? You feel you feel it's time for more consumer apps, which we don't see enough, or what is your view on this?
Yeah. I mean, I think consumer apps should stop talking about blockchain, and consumer apps should just feel like you don't use blockchain. I think that's probably the killer use case. But No, it's a great question. It's one that get asked a lot, and for which you always get the same answers most probably, but it's also very one hard to answer. I think there's one thing that I've learned in 2019 is that you have to remain curious and you have to remain open to new ideas, because in a bear market you tend to ignore them because you don't want to have the noise in your head of new ideas, because you think it's all going to fail anyways. I think we've come to a space where the application of real world assets remains, extremely exciting. And I think, tokenized T-bills is great and fun. It's a great application, but I think we need to look further. And I think, opening up financing applications in Latin America, for example, I think, show exciting use cases. And I think, the real world asset side of things opens up, that industry. Stablecoins remain extremely exciting. Today, we have a predominantly US dollar denominated stablecoin ecosystem. You're going to see more and more regional players pop up with or without the support of the circles of the world. And I think that's incredibly exciting, which chimes into the next point is you're going to see synthetic FX markets on concentrated liquidity pools. Like you're going to see that. You're going to see a US dollar stablecoin traded against a Indian rupiah stablecoin. I mean, you're gonna see that, and I think those applications in a decentralized manner is what excites me a lot, because we've come to a point that decentralized liquidity provision, although it's still challenging, it's getting to a point where it also opens up the capacity for lots of people to interact into, and not just market makers. And yes, you have to be professional because it's not easy. I think lots of people understood that by being an LP in Uniswap, impermanent loss is not your friend. But there will be new technologies developed that is going to make it easier and more relevant to participate on liquidity provision side of things. So decentralized exchange venues keep popping up, but the quality is getting better, especially thanks to the emergence of L2 and L3 now. So that's really, really great. And then you're talking about like the real deep tech type of stuff, like block building. I think, we see lots of stuff happening there as well. And I think, those type of interactions from solid institutional players is going to make the overall infrastructure even better. And I'm not going to call infrastructure investments to be new, because we've been doing it for 5 years.
Yes.
But you're seeing those very small subdomain niches pop up, for which the effect will be felt immediately. And I think that's more exciting to me, which is not something with crazy, use cases and UIs and UXs, but it's actually, those are the things that are going to be needed for that killer app to be developed, because today it's still too soon. I think we're always being a bit too ambitious to, run Instagram on a blockchain. I mean, we're not there yet. And I don't think it's actually needed, by the way, but, or maybe it is, in regards to privacy. Talk about privacy, I think optional privacy applications are massive. Like, in order to be able to have that embedded into your blockchain. So CK Tech, for example, that's the exciting stuff.
That's the and account abstraction and stuff. And what about AI? Everybody's talking about AI and Web3 and AI and, what about that? You think it's all hype or any legit stuff there?
No, lots of it is hype, but that's fine. I think hype is needed for people to be attracted by it and start building in it. Bear markets and de-hype or destruction is needed to create a thick skin and to keep the real believers in there. So I always tend to be very excited about hype because it brings in new eyes. And I'm even more excited about bear markets because they keep the good ones there. Now, so AI, we manage a lot of data as a market maker. So we also understand that quality of data is going to be essential for any type of machine learning or AI to be successful. And today, the whole data, let's say, bottleneck is still very much existent and very much relevant. So doing this in a decentralized manner is a great idea, but I think we are definitely not there yet. I'd love to, receive comments on your podcast with links towards exciting stuff happening on the data side. But I think that's going to be essential and needed for us to be talking about relevant applications of machine learning and AI into Web3.
Yeah.
But again, hype is great. So keep building, keep trying it out.
I think the data projects in crypto that I really believed in early 2019, 2020, that I wanted to take off haven't really taken off the way I would like them to, because that was my entry point into crypto, like data privacy, and that's how I got excited with, don't want to really take a lot of names because I've worked with them. But yeah, how I really wanted these projects to really be like, wow. But now it's just like, okay, you raised a lot of capital at that time. You got like 100 million, maybe you had years to survive. And then the product or the innovation that I wanted to see, it's not there. So I would personally love if something like that comes back with AI and data and Web3 and, privacy preserving stuff. Honestly. Okay, I have one question and then we'll do the rapid fire. So what to look forward to from Keyrock next? I mean, what do the next 12 months look like for you guys?
So for us, we believe that every asset will be digital one day, and it will be stored on a either public or private ledger. That's to be seen yet, but everything will be exchangeable in a digital manner, and it will be stored on a blockchain. Which makes it extremely important for us to be able to offer our services on every asset in the world.
Mm-hmm.
So, major efforts from our end, major, projections without me being able to disclose, yet where we stand on the licensing and regulatory side of things. So keep your eyes out to get similar updates like we had, today, which is the 26th of September. With the Swiss VQF updates. So more on that. OTC, we've gotten to a point where we are able to offer institutional access on the OTC side of things. And we will be a very active participant on chain. You're going to see more and more of our activities on there. You're going to see us in the block building space. You're going to see us in governance forums more and more. We've got panels who lead their Web3 activities, and we're going to be an active participant. We strongly believe that in order to build the industry, you need to be an active participant in governance, in the governance side of things. Expect us to communicate more and more about the trends that we're seeing, but also the trends that we don't like to see in the markets. I think everybody has a responsibility to not just call out what is happening, but also to make a difference. So I think the combination of all these things, if that happens, I'll be a very, very happy and proud man. But step by step.
Yes, step by step. That's the key. Okay, so let's ask you some fun questions now.
You make me scared now.
No, it's not. Actually, usually I prepare this stuff, but today I was so busy, so I'm just going to spontaneously ask you from my previous notes. So, okay, this is like the most common. So, Bitcoin or Ethereum?
Ethereum.
Ethereum. Okay, good. Raising funds through tokens, basically community or VCs?
VCs. Token or a means to an end, not the goal.
Okay. What's your crypto is, okay, very hectic lifestyle we all have in Web3, always on our phones. What is your productivity hack to get stuff done?
Dare to say no and be transparent about not being able to walk the talk.
What is the first token you bought beside Ethereum or Bitcoin?
I actually got two. So the first one that I was N shares was called Neo. That was called the Chinese Ethereum at the time. Neo N shares.
Oh, nice.
That was great. And then actually the first ICO, maybe besides, like the first, let's say, funky ICO that it was Render, which is now taking off, because of the machine learning and rendering needs. Render is taking off. Yeah. Those are
Nice.
top of mind that
When was this? Which year was this?
Render was 2017, I think. Yeah,
Okay.
sometime mid 2017.
Yeah, I was not into crypto at that time. Uh, okay, and what's your FOMO moment in crypto? Oh my God, I wish I knew this. I would have done it differently, or I missed this.
Every yesterday in my career, I guess. There's
Okay,
always something. There's always something.
there is always something you missed. Okay, and your most memorable moment at Keyrock. Don't say fundraising like
No. Don't say fundraising. No, not at all. My most fond memorable memory at Keyrocks. It's actually 2 years ago, where we were doing a massive upgrade of our technology, which was very hard. We migrated to all of our tech stack to a Rust language, and because it was so hard, there was a lot of setbacks. And we were all there in the same office, and our tech team was asked to really keep working nights and holidays, etc. But we all did it, and I think I'm still very proud of that moment. Besides not me being actually super involved in that process, I'm not a tech profile. It was great to see us all aligned in the same direction. If that would have not happened, and we would not have had that energy from the whole team, I think we would have not been here today. And I think that's a thing I'm proud of at Keyrock.
sentiment. Yeah, yeah.
Yeah.
That's a nice answer. What is one hobby that you feel, oh, if I had more time, I would do more of this, and I don't get enough time for it outside work?
You know what? My mental health is thanks to golf. I love being in nature with friends, having my phone away for 4 or 5 hours, have a drink. So I'd love to do that more.
Oh, nice. Yeah, that's a good one. Okay, this is the last one, and we always ask everyone this: if you had the opportunity to have dinner with one crypto OG, Web3 person, who would it be, and what would you ask them over dinner? Like, what is the topic you would like to discuss with them?
I'd love to meet, and I don't know the real number, but it's Punk5609 or something, big influencer in the NFT space.
Okay.
I'd love to know who he is. I'd love to know who's behind Punk. So I'll ask him, who the hell are you, and why have you such an amazing, beautiful conviction of NFTs as an asset class and how it's going to change the world? I think I'd love to have a face-to-face conversation with him or her.
Wow, I've never got this answer. I love it.
I think it's very important in this space to not. And I think there's lots of heroes, and I think there are lots of exciting people, but we make too much of a god of somebody sometimes in this industry. And I think they're rather approachable, and Twitter gives you the opportunity often to have an interaction with them. What I do appreciate about Punk, I'll call him Punk, is his walk the talk mentality and his exposure to a strong belief, his experience in crypto as well. So I think it seems to be someone that has so many different touch points of the industry that I think I could have a conversation with him without being a fanboy about a specific tech, but actually have a conversation about the industry and his vision and the future, which is hard to get by. Sometimes we, have the fanboy effect and we talk too much about tech, while vision is what it's all about.
Yeah, yeah. No, I mean, we've seen what happens when we make gods out of CEOs, right? I mean,
that's true.
We have one very, very prominent example of that. So anyway, this was fun, Stef. And, we had some deep conversations also, and it was lovely to hear your views. Thank you for coming on Web3 Quest. And I wish you a great day ahead.
Likewise. Thank you very much for having me.